Alright, what's going on, guys? Jeff, you're back again with another video, and we have to talk about Oracle. Back in September, Oracle basically showed us one of the strongest earnings they have done in years. Stock is up to an all-time high at about $345 as of earnings. So you see cloud revenue go up, you see margin going up, you see backlog growing, and the stock is doing fantastically. And then out of nowhere, we just saw that Oracle went down by 45%. There was a huge tank down. Right now, it's sitting at about $200 or so. So what actually happened in this whole entire AI environment? Let's break it down in this video. Now, first up, let's talk about how Oracle was basically priced for absolute perfection at $345. The PE ratio was astronomical. However, investors weren't just expecting good numbers. They were expecting hyperscaler level growth. Especially with that kind of price tag on it, a lot of people expected it to be Nvidia in the cloud space. The kind of explosive AI cloud ramp that you would want to associate with Amazon and Microsoft, right? And while Oracle's results were pretty solid for what it's worth, they weren't Nvidia tier mind-blowing, if that makes sense, right? When a stock is valued like it's going to dominate AI, but only deliver regular strong growth, the market will punish it instantly. And this is the classic case of having great results, but even greater expectation. Now, just like how markets were back in 2023, people were constantly expecting the market to beat itself, and every single expectation has to be beat. Just look at Nvidia, for example. For the whole of 2025, every single expectation that came in had to be better. And that's just how the market is. Greed. Now, let's talk about cloud growth. They're still lagging in the big three, right? Because yes, OCI is rising fast, and yes, AI workloads are helping, but investors compare Oracle to Azure, to AWS, to Google Cloud, and the scale just doesn't match. And when you're playing in the same league, being good is simply just not enough. You need to be spectacular, right? And the market didn't see that same level of acceleration just yet, which is why you see a lot of pessimism in the stock, which caused a little bit of a sell-off. Now, we have to talk about the Cerno acquisition as well, which was supposed to be Oracle's big enterprise expansion into healthcare data. Instead of that being the case, it became slow to integrate. We saw lower margins. We saw the revenue synergy not exactly matching up fast enough. And healthcare deals generally move slower because of government contracts and things of that nature. And then, investors, we don't like slow, right? We don't want everything to be fast. We want to see things being implemented fast, integrated fast, and giving us results fast. So even though the core business is improving, Cerno is still a drag on overall growth perception, especially for Oracle's main acquisition of the year. Now, guidance also didn't really match the hype per se, because Oracle basically told us we are growing. It's just that we are going to need to take some time for us to fulfill the amount of orders that we do have. So yes, the AI story is real, don't get me wrong, but the timeline isn't as immediate as the stock price was implying. So when the entire AI trade is built on acceleration, not patience, that kind of cautious guidance basically is gonna be showing pretty badly to the investors. So I do want to talk about the part where not a lot of people want to talk about, which is the trading behavior around the earnings pop. Because I was looking at the whole entire stock market, especially for Oracle during the earnings report. The volume spiked before the earnings release. There was this vertical surge into the all-time high, and the liquidity disappeared right after completely. Right? This is basically the textbook definition of institutional profit taking. I don't think that this proved wrongdoing or any internal trading of any sort, but it does suggest circular flows, internal rebalancing, or funds using the pop as an exit, basically selling the news. Now, when a stock is pumped into an all-time high and then dumped immediately after, do not be mistaken, it is not one of us. It is not a retail trading movement. This is a big money entering and exiting the market via liquidity flows. So, Add in the fact that the entire AI trade is now rotating. Just look at Google, for example. With new tech coming out, it easily displaced Nvidia's long-standing streak of green candles in the market. Now, investors are moving from secondary beneficiaries like Oracle into core AI winners, chip makers, data infrastructure plays, and energy for data centers. So Oracle, despite doing really, really well, get hits earlier in the rotation cycle simply because it's not the main character in this current AI narrative that the whole market is reading. And of course, technical factors that made things a little worse. The stock was extremely overbought with such crazy optimism. It got stretched far above its moving averages. If you look at technicals, the RSI was near breakout exhaustion. You saw volume diversions near negative, right? So the entire trading setup basically attracts selling pressure, even though we do not see much of a fundamental problem. So when the earnings pop happened, traders saw this a perfect opportunity to take profits and just let the stock reset. People can get in whenever they want. Before the earnings, Oracle was actually sitting just about $180, $200 or so, which is why the stock basically is already back to reset. Now, finally, we have to talk about the hidden factors that don't show up on headlines. We're going to be talking about GPU supply bottlenecks, slowing AI cloud onboarding, the government contract delays on Cerno, and the simple reality that Oracle is an AI beneficiary, right? It's not yet an AI powerhouse, unlike your Google, your Nvidia, and so on and so forth. It is in the story, but sadly, it is just not the protagonist. Now, however, I don't think that Oracle is all bad, okay? Because personally, I do like Oracle, especially we cannot forego the fact that the earnings report did show us some very, very interesting bits on Oracle, the company. Because if you let all this negativity cloud your judgment, let's go to the facts. Okay, it's still factual that there is a massive back order from Nvidia. They're still on track with their multi-year cloud commitments with major enterprises. And let's be honest, OCI, albeit smaller than the other rivals, I do believe that OCI's growth rate will definitely outpace its bigger counterparts. Those rivals are not able to match the same growth rate as what OCI is going to be doing. Now, especially if Oracle continues to go on this massive discount right now, you're able to enjoy Oracle trades at a lower PE value. So personally speaking, I don't think that this is all bad for Oracle. So of course, if the collapse wasn't because Oracle did badly, it is basically because investors expected this hyper growth miracle and instead got solid, steady improvement, great earnings, wrong expectation is what I think. And when the hype cycle is this hot, even a great gets sold. Basically, buy the rumor, sell the news. But anyway, if you guys do enjoy this kind of video, I would really, really appreciate it if you drop me a thumbs up, subscribe to my channel. And my earlier video actually became one of my most viewed videos. So thank you guys so much for your support, and I'll see you guys in the next one. Peace out. Goodbye.